Hey everyone, welcome to a Optimum FX weekly analysis. It's currently the 26th of September today, 2021. It's about 8:30 where I am right now, so roughly until 12 hours until the market opens on Monday. So what I'm going to do today, I want to go through our major currency pairs, going to be looking at commodities, going to be looking at the equity market also, and I'll be looking at what macroeconomic data is going to be released. Once we have the fundamental confirms, we'll go to the charts, and then we'll map out potential trade ideas with the fundamental and technical confirms. So firstly, we'll just briefly go over what data has been released, and understand how that can impact the market and what volatility can arise from this data. Okay, so firstly, let's quickly have a look at the US. We do have a busy week. It is the last week of the fiscal month, last week of Q3, so we do have to keep in mind end of monthly flows and, more importantly, end of quarterly flows. Okay, so we do have to keep that in mind. All right, so firstly, we do have durable goods orders being released on Monday. We do have some auctions, some bill auctions for treasury securities on Tuesday, which really is going to bring much volatility. It never really does. On Tuesday, we do have Red Book Index, and more importantly, we do have the Case-Shiller Home Price Index, which is just a home price index, and discussing the change month over month in the home prices, which places have increase and decrease, and you can get an idea of consumer confidence when it comes to buying houses, and where the price of houses has increased and decreased in certain states in the US. So that'll be a very key thing to look out for, and obviously that ties in with weekly mortgage applications and pending home sales. We do have crude oil stocks change, which is a weekly report, comes out every week on Thursday. Thursday's a pretty big day because as usual, we tongue twister, as usual, we do have initial jobless claims, but prior to that, we do have PCE, personal consumption expenditure, which is a reading on inflation, if you're not aware. And then we do have GDP numbers coming out, so very big, because we've got to keep in mind that GDP this comes out every quarter, okay, quarter over quarter, okay. So do have to keep that in mind. And on Friday, we do have PCE price index year over year, which is monthly report. And we do have market manufacturing PMI. So we do have PMI and ISM data, so Purchasing Managers Index and the Institute of Supply Management. Okay, so that's going to bring a lot of volatility with the US dollar. So so on Friday it will be a pretty big day, and plus this is the start of the month as well. Okay, so we do have to keep that in mind. And one thing I would like to mention, if you're not in the Telegram group, one thing I always mention at the end of each month is how Dixie always rallies. Okay, Dixie will always rally come the end of the month. Okay, so it's a historical repetition thing, like it tends to happen over and over, but I guarantee you Dixie will be bought up at the end of the month. I guarantee you. Okay, it might not, but there's a high chance that it will be bought up. So that's just one thing to keep in mind, and we can map this out with the data as well. So anyways, going on UK, we do have housing prices month on month, consumer credit. Consumer credit is a big thing to look out for, and for money supply. So consumer credit, you got to realize, like, the economy drives on consumers and people, buying goods and services, buying cars, buying assets, buying homes, buying food, going up and filling their car up with fuel and so forth. Like each economy is derived by the consumers. Okay. That's how we get surpluses, month over month, quarter over quarter. That's why retail sales and consumer confidence are very important macroeconomic indicators. So it's got to keep that in mind. Consumer credit, slow impact, but I just think it's very good to look back, month on the month, understand the change, and line it up with macroeconomic data. And then you can line it up with the charts as well. So it's just one good thing to look at if you do have the time, and want to understand, how the economy relies on consumers. Okay, so if it didn't, the economy would end up like Japan, and you would end up with stagflation. So just keep that in mind. So on Thursday, we do have GDP being released, and market manufacturing PMI on Friday to start the month. In Europe, we do have money supply as well. Consumer confidence being released. We do have CPI being released on Thursday. Market manufacturing PMI on Friday to start the month. In Japan, we do have plenty of data being released. We've got retail trade on Tuesday, but on Monday, start the week, we do have Bank of Japan monetary policy meeting minutes. It's just reiterating what was discussed at the monetary policy meeting, where they kept everything status quo. So that's one good thing just to keep in mind. But like, it's only going to bring a bunch of volatility if there are any amendments or revisions from the initial meeting itself. So yeah, just going to keep that in mind. So moving on, Wednesday you have industrial production, and on Thursday, a very big day on Thursday. To end the month, we do have unemployment numbers and manufacturing outlook and index. So yeah, this is going to be, it's going to be very impactful across the Japanese yen and across Japanese equities. Okay, so moving on to Canada, don't really have much coming out. All you got is GDP at the end of the month, and market manufacturing PMI to start the month. And for Australia, we do have retail sales, so that's going to be massive. So that's going to be very impactful to the Australian dollar. We'll identify the consumer confidence, and to be quite honest, within the Australian economy over the past month, there's been a lot more confidence throughout the Australian economy compared to what it was, the previous month and a month before that. Just with the restrictions starting to ease. Just mainly with the restrictions starting to ease, so there is a bit more consumer confidence. Restrictions easing, more businesses opening up, more revenue for business, and which provides a surplus in the Australian economy. So on Wednesday we do have private sector credit, and on Thursday we do have building permits being released as well. So alright, let's go on the charts. So firstly, we're going to look at the Australian dollar. So as you can see, I'm always looking at something that's got to do with the dollar, because I prefer trading risk currencies against safe havens, because they all operate the same. Obviously there are some imbalances and some differences, because some economies are developing better than others, and yeah, like there are just going to be some differences and imbalances, and that's all derived from the the economic conditions in that set country or set economy. So firstly, let's look at the Australian dollar. So I'm on the 4-hour time frame. So like I've discussed in my previous analysis, after dipping at these lows here, with the dollar gaining strength, with the Federal Reserve talking about tapering and eventually hiking the interest rate as soon as next year, we have seen the Australian dollar fall off, and the Australian dollar has fallen off along with our euro and sterling, mainly because of the Delta variant, increase in the lockdowns, which in time decreases consumer confidence, decreases retail sales, and that overall that weakens the economy. Okay, like to me, this is just a pullback for the actual initial move, for us to continue further to the upside in the long term. Like, realistically, if you're speaking on a macroeconomic perspective, the only reason, and on a technical perspective, like if I'm just talking about fundamentals, the only reason that dollar, like the US dollar, is gaining strength is just rumors and optimism from the Federal Reserve talking about tapering their bond buying program. Okay, so when they start to taper the bond buying program, that means they're using less US dollars to purchase treasuries and securities, bonds. And when they purchase less bonds, what does that do? That decreases the supply of the dollar and overall increases the demand, because if they're injecting less liquidity into the market, that economy is thriving, or that economy is essentially out of the woods. Okay, so So you just got to keep that in mind, you know, when they talk about tapering. If you're not familiar what tapering is, so alright, so just to quickly reiterate, tapering is decreasing the bond buying program, or decreasing the purchase of assets. Okay, so decreasing quantitative easing. Okay, so at the moment, Federal Reserve's buying $120 billion in securities, $80 billion in treasuries, $40 billion in mortgage-backed securities. Okay, so once they decrease that, all right, they're only doing that to inject liquidity in the market and provide fiscal assistance throughout the economy. And when they start to decrease that, like, they're not going to stop it completely, because that would just cause a massive disruption in the market, like huge. Okay, like it has to be done through baby steps. So when they do that, they're decreasing the supply of the dollar. They're printing less money. Okay, that decreases the supply, increases the demand, because in time that means the US dollar is going to be more valuable. Less printing, higher demand, higher interest rates. Foreign investors will start to invest into the US dollar, because that economy is thriving, and they can get a better rate of return compared to a country that isn't even talking about interest rate hikes as soon as 2022. Okay, so just understand on that perspective. That's the reason why dollar has been gaining strength, and we've been seeing the sell-off on the higher time frame. Anyways, so that's enough talking about that. Okay, so on the 4 hour time frame, right? I've taken off my key levels, because I know it can be very hard to see on the key levels. So I just want to I just want to mark out, some key levels just to watch out for. Like, to me, I'm identifying liquidity levels, some order blocks, some imbalances in the market, and potential breakouts with the technical and fundamental confirms. So firstly, let me talk about, alright, so essentially we're just playing around, like on the high time frame, we're just playing around at this little range here. Okay, that's probably around 72, probably about like 72 300. So yeah, about 72 300, and I'm really identifying these highs here. Okay, roughly at 73 cents flat. Okay, I'm identifying this high time frame order block, and guess what, it aligns with this previous high here. Okay, so essentially what we've done here is we've come up here, played in this range, grabbed liquidity, push it to the upside, this previous order block low. Okay, this previous order block low, yeah, that'll do. Yeah, so this previous order block low. Okay, these lows here, right? This is just imbalances right here. Okay, so grab liquidity here, and now we push further down. Okay, if we do see continued fear in the Australian economy, if we do see weak as hell retail sales, we can push further to the downside. I only want to push further to the downside. Right, sorry, let me rephrase that. You're only going to push further to the downside if you see some 30-minute, 1 hour high time frame candle body closures below 72 300. Okay, so below here, retest, ideally come down behind this little liquidity level here, then eyeing these candle body lows, and then I'd have to zoom out to see where we could potentially drop to. So but you're only going to see that if dollar starts to break above 93.5 and continue back up to 94, which we haven't seen for ages. And we do have to keep in mind, like I did say earlier in this video, in a month we will most likely see dollar continue to rally. Okay, so that's what I'm seeing. Candle body closures below here with the fundamental and technical confirms. Technical confirms once we get some high time frame candle body closures below here. Fundamental confirms once we get weak Australian dollar, strong US data, strong employment data in the US, jobless claims data, we can push further to the downside on the Australian dollar. Okay, however, if we start to mess around this sort of range here, we can take some high risk buys here, potentially push to the upside with strong macro data in the Australian economy, and weakness in the dollar retreating from those intraday highs. Okay, retest here, continue back up, push up to this liquidity level here, break and retest, and probably just come up to this level here around 74.5. But realistically, I'm more than likely just blocking these sales here. It's just that you need to break below here. Okay, you realistically just need to break below here, come to the downside, target these levels here, and then potentially target 71, just around 71. Okay, so that's the Australian dollar. Moving on to the euro dollar. Yeah, so we take off these lines. Alright, so euro dollar, like the fact that we actually did retest these intraday lows here, yeah, so the fact that we actually did retest these intraday lows here, and you know, you're seeing like this bearish structure being formed on the higher time frame, and failures to break and retest above these highs here, even this high here, you know, you just get essentially you just get a wick, so you get a lot of buy side exhaustion, and we do continue to exhaust and push further to the downside. So you probably want to, ideally, yeah, you probably want to target around, what's that, 116, that's probably 116,700, so you probably want to target 116,700, and there's a bit of imbalances here, so realistically, with this bearish corrective structure, if we do see weakness in the European economy, and strength in the US dollar, we can push further to the downside. Okay, so initially we did mirror this initial bearish move to the downside. Once we failed to break above these highs here, like continue and stay above these highs here, we didn't even grab liquidity at around 117,500. Okay, we didn't grab liquidity there. So once you, honestly, what I'm really liking as well is if we can break and retest below 117,100. So if we can break below 117,100, I'm really liking if we can push further to the downside. So to me, and realistically, it matches up with these previous order block lows, this previous range here. Okay, so yeah, so what I'm really liking is if we can come down here, retest, and ideally I'd probably want to target these lows here, but I wouldn't be surprised if we grab liquidity and push further to the downside. But the thing is, once you break and retest below here, we will just push further down. There's a good chance. Okay, so I'm very bearish. Like I said, if I'm bearish on the Australian dollar, I'm bearish on the euro, I'm bearish on sterling dollar, and I'm bullish on USDCAD. So yeah, so it's probably one thing I'm looking out for. However, you know, once we actually close, like if I get if we generate a bit of a high time frame support at 117, 100, I'm really I really like taking, you know, some high risk buys, identifying these liquidity levels, but I don't really want to be picking a bottom. Okay, because when I'm looking at these charts here, we got this we got this low being formed, this previous highs, and then we just dip down, and then we just break above and play around this range and steadily come up. But the fact that we're in this strong bearish structure, I'm not too inclined to taking any buys. So looking for sales on euro dollar. So GU, all right, so GU is actually looking pretty good, right? What I'm seeing here is that we're failing to break and retest below 136,100. Okay, so the fact that we're failing to break below 136,100, like I said, if I'm bearish on Aussie, I'm bearish on euro. Okay, so ideally what I want to see form, and I know from last week's analysis I was calling sells once we actually did break below here. I think it was just at these lows here, so I was calling sells here, I was calling sells there, and the fact that we actually didn't retest and generate liquidity at about 137,500 is a bit of a surprise to me. So to me, that's a bit of imbalance within the market. We actually did retest this previous liquidity level. Okay, so ideally what I want to see is if we can actually stay below probably these levels here, even these levels here, right? Probably if we can actually stay below, let me undo that one. Yeah, probably if we can actually stay below 130, like to me, which is a psychological price level, if we can stay below 137 flat, I'm really liking if we can take the sales down to 136,500, which is a 50 pip range, and then you'd be targeting these previous lows here. Okay, so potentially if we can generate liquidity, failures to break above here, really liking a retest, and for us to continue and push further to the downside, retest, grab liquidity, push further down, fill this price, and push further to the downside. And the fact is, once you break below here, it's just gonna melt. It's just gonna melt, because you got to realize there's a lot of sell orders, a lot of sell stops being triggered below that price level. Okay, so Yeah, that's what I'm looking at on GU. GJ is kind of the inverse because the Japanese yen is actually pretty weak at the moment. It's like massively weak. But look, yeah, because USD yen's trading at 110 at the moment. So, alright, let me go on to GJ. So GJ, the thing is, once you break and retest below this little liquidity level here, I'm really liking if we can actually push further to the downside. So break below 151.200. Okay, so if we can break below 151.200, I'm really liking if we can push further to the downside and initially mirror this upside move. But we do have to keep in mind that, you know, this upside move has essentially mirrored this downside move. Okay, so, and the fact that we actually failed, we actually failed, you know, to break and retest and play back in this range here. Like we actually failed to play back in this range. Okay, so we fell back in this range, failed to push further to the upside, targeting these previous highs, and then eventually targeting these highs. Like ideally, that's what I'd be looking if I was in a bit of a bullish bias. But the fact that we failed to retest and break and retest above there, like that's just showing me a lot of sell side liquidity. And when I'm looking at GU at the moment, it's pretty bearish. Okay, you know, obviously there's a lot more money being flowed into the dollar compared to the yen, and more importantly compared to sterling, because we are in a bit of a risk-off sentiment. Okay, just with the optimism and the sentiment from the Federal Reserve, right? So one thing you want to look out for is, honestly, if we can break and retest below 151.200, I'm really liking if we can push further to the downside. I'll be eyeing these liquidity levels here. Okay, so that's what I'll be targeting, eyeing these liquidity levels here, push further down, and continue pushing further to the downside. You're really only going to see that if we actually see more of a risk-off sentiment, especially once you fail to break above here. You know, we can get in for a little sell here. Once we break below this significant price level, candle closures below here, push further to the downside, and aiming for these lows here, which is a big trade. Personally, for me, I just probably want to get, you know, maybe like, honestly, I only get like 20 to 30 pips in a market, but I like to, you know, I like to hold potential swing trades, which are going to give me like a very high risk to reward. Anyway, so that's just my trade idea on GJ. Next one is moving on to USDCAD. Okay, so with USDCAD, USDCAD. So realistically, when I'm looking at this chart right here, so quickly mark out this liquidity level here. Right, so these highs here, okay, there's a bit of an imbalance here, but right, so I'm identifying this little order block that we had, and we just played around this range. We just got engulfed here, pushed further to the downside. Now we played back in this range. Now we actually started to retest above here, right? So we started retest above here, and then, you know, this is a new order blocking form. Like, really easy to say in hindsight, but the thing is, I'm not looking to mark out prices on here. Like, when you're marking out order blocks, you're looking at what happened in the past, okay? Because you got to realize, when you look at the higher time frame, like, order blocks is just accumulations. It's just buy orders and sell orders just going, you know, just being handed over before we get the initial move, you know, whether we're gonna retest above or retest below. Okay, so realistically, like, we just play around this little order block. Like, it was a bit of a fake out here. It's a bit of a fake out, which happens in the market. It is what it is. But eventually we do push further to the upside, and that's with, you know, dollar strength over time. So now, what am I looking at with USDCAD? Okay, once we fail, like, honestly, once we actually fail with these candle body closures here, yeah, so ideally, once you break and retest below here, I'm really liking if we can actually push further to the downside. But I'm not too bearish on USDCAD, okay? I'm not too bearish at USDCAD, just with the optimism, like I said, for the Federal Reserve. And there's a historical repetition where the dollar likes to get bought up at the end of the month. So, to me, very medium risk buys here. very medium risk buys here, retest above here, push further to the upside. Once you clear above and retest above 127 flat, we will push further to the downside. But you know, you are seeing, you know, this bearish crypto structure being formed. Okay, so you are seeing that, you know, it is what it is. But once you break and retest above 127 flat, like, to me, that's just showing a lot of dollar strength. And aided with that is if we see, you know, oil start to depreciate, and we do see some weak data in the Canadian economy. So yeah, so once you break and retest above here, safer buys, medium risk buys at around 126,500. 126,500. However, once you get a candle body closure below here, we can push further to the downside, grab liquidity at these previous lows at around 126,800 or probably 900. But I wouldn't be too inclined on, you know, starting to sell off below here. You know, once you retest below there, yeah, obviously, you know, at that time it is a good time to sell. But with the current macroeconomic conditions, mapping out, you know, the fundamental, well, the data that's going to be released this week, looking at the chart, I'm more inclined on taking some buys on USDCAD. Safer buys once you break and retest here, medium risk buys here, very high risk buys, but I wouldn't be too inclined on those buys. Like, just wait. To me, that just be like a fat liquidity purge. So, anyways, so yeah, that's my idea on USDCAD. So, more importantly, let's just take some time just to look at the US dollar. Okay. So, when we're looking at the 4 hour, right, after dipping from these lows here at around 90 flat, once you, honestly, once you break and retest, you know, the yearly high here, is it yearly? Yeah, so, sorry, I just had to look, so it's the yearly high, oh, yeah, so the yearly high of, what is this, like 93.8? Oh, 4, sorry, 93.4. So once you break and retest above there, to me, that's just when tapering is confirmed. And to me, you're probably gonna break above there, probably in November, because that's when they actually confirm tapering. But the thing is, you'll see a lot of hints from the central bank members indicating that, like, you know, indicating that they will taper, or they have already progressed tapering. I wouldn't be surprised if that actually happens. So, you know, if that does happen, we will see US dollar start to gain strength, and then you probably want to target not 94,600. Okay, 94,600. So you probably just want to target that little price level once all that is confirmed. So, firstly, when I'm looking at the US dollar, right, I'm identifying these highs here. Like, I'm always going for the candle body closures, playing around this little previous range here, right. So, you know, we are just playing around this little range here, okay. Oh, actually, hold on. Let me make it a bit clearer. That'll make things a bit clearer, I'd say. These lows here. So yeah, there's a bit of imbalance here. All right. So realistically, I'm really liking for US dollar just to stay above 93,150, 91,350. But to be realistic, like, to me, the US dollar, for the Federal Reserve to start tapering, to me, the US dollar is a bit high for them to start tapering. So I believe the US dollar will continue higher. I just think I just know that there's going to be a bit of a pullback, and I won't be surprised if we even pull back to this range here, or even these previous lows here. So if we actually pull back below here, generate liquidity, see price be pushed to a more favorable demand zone, I'm really liking that trade idea. You know, with US dollar, it's been a pullback for us to continue the actual move, push to the upside, tapering confirmed, then we push further, okay, and then we see a bit of a dip in our equity market. So that's realistically what I'm looking at the US dollar. So yeah, I wouldn't be surprised if we potentially do a bit of a pullback during the start of the week, and then we see a long pass of liquidity being flooded into the US dollar due to historical repetition and due to the current macroeconomic conditions in the US economy. So, but I just don't think we will clear above 93,500. I really don't think that we will just like clear above there. Not yet, anyway. You need to get more concrete confirms from the Federal Reserve. So that's roughly my trade idea on the US dollar. So next thing, we'll quickly just have a look at gold. So gold has been on the down, being pushed back to the downside with US dollar strength. It's been obvious, because at the end of the day, you are trading gold against the US dollar. It's like when you're trading Aussie against the US dollar. So with gold at the moment, we have been correcting, from these highs around 1830, and the fact that once we actually did retest below this higher time frame or order block low, and ideally once we actually did we gave like a little nice tap at the most previous order block, okay, so, and then we did push further to the downside. But what I'm really liking now is if we can actually get some nice candle body closures below here and then push further to the downside. So stay below 1750 and go down to roughly, that's about 1728, I'd say 1728, targeting these candle body lows. And then the thing is, this is only going to happen once US dollar breaks above 93.5, and then you get those tapering confirms, and you get those hike rate dates confirms, okay, and then you see a pullback on the equity markets. So once you retest below 1750, I'm really liking for us to push further to the downside. I won't be surprised if this actually matches up. Look, that's just ideal. That's just ideal. This little high time frame order block low with the candle bodies, because I always like to go for the candle bodies, because price close there in that certain time frame, or that certain time. So what I'm really to me is looking very bearish on gold. So once we push further to the downside and you get weak PCE numbers, so if PCE numbers like inflation numbers last week were weak, we will push further to the downside, okay, because you got to realize that gold is only used as a hedge against inflation. But just understand, once you break below these yearly lows, there's gonna be a lot of sell stops triggered. Ideally I want to close below here, target 1728. That'll be a good nice 200 pip range. 1750 to roughly 1730, that'd be a nice little range to target. Gets a good some high risk high reward trades. So next thing we're gonna look at is US30. I don't really want to make this video too long, so yeah, next thing we're looking at is US30. So after failing to break above these highs at roughly about 35,600, we have pushed further to the downside. This is mainly due to Evergrande and their debt crisis at the moment. I think they're in $300 billion in debt at the moment. And then we've seen a lot of commodities fall to the downside, and we've seen a real estate sector fall to the downside as well. And we do have to realize that potentially we can see a lot of investors who have money tied in with Evergrande have to liquidate their assets to cover their losses, okay, to cover their losses. So that's a potential. We could see the housing market flood with a lot more assets for sale. So that's a possibility. And I don't have the chart up now, but I just know if you go on commodities, you go on iron ore, steel, zinc, those commodities have been falling to the downside. And any mining companies that solely rely on the production of those goods, of those metals, they've been pushing further to the downside, okay? Because if one of the biggest real estate firms or developers in the world or in an economy is about to default, okay, the amount of contracts that they have in place, the amount of production that they have, when it comes to using those commodities, there's gonna be less demand. The supply's gonna be there, but the demand's gonna be a lot more less, okay? So that's just one thing to keep in mind. That's probably the main reason why the commodities have started to fall off. It's just for this crisis at the moment. But realistically, I think they're gonna get bailed out. I reckon they're getting bailed out. If worse comes to worse, I feel like the Chinese, the the people Bank of China will just like come in, save them. If worst comes to worst, the government would nationalize the company. So it's a win-win, I reckon. Like it's a win-win for them, for 1%. But that's just my opinion. I could be wrong, but we'll just see what happens. I don't want to go into too much detail about it. But yeah, we'll move on to the equity markets. So like I said, there's been a strong risk-off sentiment just with the Federal Reserve and that Evergrande crisis at the moment. So there's been just a bit of a correction. There's going to be a bigger correction once we get confirmed dates for tapering. Okay, so we've seen Australian markets start to dip, start to bounce off these lows here at 7100. Once you break and retest below 14600, the China 50 is just going to push further to the downside, and we just know that the Chinese government has been, they've been on a massive crackdown in regards to regulations to certain sectors and industries, and a lot of markets have taken a massive hit, like the education sector. Like apparently the education sector can't make any more profits. Like, if you don't believe me, you can go Google search it. But they've been on a massive crackdown with education companies, Alibaba, a lot of Chinese companies that are listed on a US stock exchange. They've been under massive scrutiny. So I don't want to go into too much detail about that. We've seen German 30 dip down to these lows at 15100, correct. Now we're chilling at 15550. Seeing Europe dip down. So yeah, it's just a bit of a correction. Just with the crisis at the moment with Evergrande, because they are a big player in the real estate market, and they're a very big player as well in the Chinese economy, because I believe 20% of China's GDP relies on the real estate sector. So don't quote me on that, but it's a pretty high number. Like, it's a really high number, and if one of the biggest developers or real estate businesses out there is about to default, that's huge. That's freaking huge for the Chinese economy, and realistically, that's big for other economies as well, because you've got to think about what other companies are tied up with Evergrande. So yeah, so I'm looking at, and we did see the VIX go up to 28. Now we're just correcting that. Now we're back down to 17. So anyways, there's a bit of there's some jitters in the market, but we got the Federal Reserve confirmed date on tapering. We do see PCE data come down, just like inflation data. We can see gold push further to the downside, and we can see the US economy start to stabilize, and those transitory 4 to 5% inflation numbers can start to fade out. So so yeah, just keep those things in mind. But anyways, I feel like this video's gone for too long, but if you enjoyed the video, please feel free to like, share, comment if you got any questions. But yeah, hope you enjoyed the video.